Alright, MegaWhale team, welcome back to our channel, guys. Thanks for tuning into today's video. We're going to be taking a look at Bitcoin today and talking about this macro descending channel, talking about the levels of which we need to actually get over to become bullish again, and the levels of which we could potentially see the price fall to if we continue in this downtrend. Before we get started, guys, head over to the pinned comment down below, click the link, join our Telegram channel, get updates to all of our updates over here, analyses and much more. You can see we had a recent update perfectly played out over here, posted all in the Telegram channel, get access to all of that stuff there. And if you're interested in the VIP channel, guys, we've got a big bit of news coming in a few days. Stay tuned to find out more information about that. Let's go ahead and get started. So Bitcoin, evidently, and everyone should know now, has been in a very big macro descending channel. And this macro descending channel is what we would classify as our bear market. This right here, this channel, this is our bear market, okay? So when we eventually break out of this channel, breaking above this channel here, that would constitute the break of the bear market and the reversal in the macro trend. Okay, so the macro trend is, no one's questioning the macro trend. The macro trend is very much still downwards. That is very, very obvious. Okay, what we're taking a look at today though is, how low could this go realistically, taking a look at our other charts, compiling it onto this chart, talking about that possible 9-year trend line retest, which I've been talking about for the last couple of weeks, and then talking about what levels we would actually need to get over for us to start seeing some bullish momentum, for us to see the price actually reverse. So let's go ahead and first talk about our macro chart over here. So if you've been following the channel for the last month or so, you would already know that we expected a retest of this 9-year trend line. Now, if we go ahead and zoom up onto the 1-day chart, we will pinpoint where that 9-year trend line is sitting. Currently, it is sitting under today's candle, which is a 23rd. I just want to make sure that's also a 24th. It's sitting around $19,800. Okay, that's where it's currently sitting. So we'll go ahead back to our normal chart over here. What we're going to do is we're just going to go ahead and mark out 19,800 on this chart underneath the current candle. So it's around about over here. It's kind of moving upwards on an angle from this point to this point. This is kind of where that 9-year trend line is. Okay, so we do expect a retest of the 9-year trend line at some point. And a lot of people are wondering, Whale, what happens if we lose a 9-year trend line? Well, since the 9-year trend line is on a weekly chart, we're not really too concerned unless we close a weekly candle below the 9-year trend line, then it would constitute being lost. Now, this is the thing. Even if the 9-year trend line is lost, we technically haven't created a new low until the new low is swept, and the new low will be swept underneath this level around 17,700, 17,650, around that level over there. Okay, so what I do expect to happen is, if we do not see a bounce on this short-term trend line over here, which is the uptrend line over here, I expect a retest of either a 9-year trend line. If we lose a 9-year trend line, coming back into this level. Until we lose this level here, I do not expect the price to fall further down. Now, if you go ahead and take a measured move analysis, we can do two variations. The width of the channel coming down, that takes us underneath, okay, to a new low. And obviously the height of the flagpole into the channel takes us significantly lower. That takes us all the way down to 7,500. Now, the reason I don't like measured moves too much is because they don't tell you where the price will stop moving. They just tell you the range at which it could go. Now, generally what happens is measured moves play out until you reach major areas of support. Now, I'm going to show you an example. Okay, so we had a macro, we had a similar channel over here. We had this ascending channel, right? This rising channel, which was a very, very bearish structure. All right, we had this fake out below off top around 48K. Okay, now if we took a measured move analysis for that structure, okay, it would take us much, much lower. I'm going to go ahead and actually bring up the trading view version, because I'm going to show you, for example, because we had this actually play out on trading view. I'm going to show you, let's go ideas. I think it was this one here. So the measured move took from the peak to down here, and it targets around $13,000. Now, obviously we haven't gone to $13,000. Obviously we saw a massive bounce here, a 46% bounce here. At this point, which means the measured move from this area here only reached 17,600, even though it was targeting 13,000. So that is why measured moves don't always play out perfectly. They usually go down, down, down until they reach a major area of support, and then a new pattern forms. So that's what's happening here on the macro. It happens on a short term as well. When you have a short term pattern forming, it will break out upwards, downwards, and then reach the area of support, develop a new pattern, and then you have a new measured move. So that's kind of what we're seeing over here and what we're going to see again. Just because the measured move is targeting underneath this major area of support, it doesn't necessarily mean we will actually be going under it. It's just indicating it is a possibility. And that's all it is, guys. It's a possibility. It's very important to be aware of the possibility, but you don't want to be making decisions based on possibilities. Okay, you want to be a little bit more sure in your decision, and a measured move isn't a very good analysis tool when it comes to actually taking trades. So what we're looking for in the short term over here, we'll go to a short term time frame. We're looking for a breakdown of this pattern. So if we see a breakdown of this pattern, and a breakdown will be most likely a 4-hour close underneath this trend line. We're on a 4-hour chart over here, a 4-hour close under the trend line, and a loss of this midline, this dotted line over here. We lose those two things, we can expect a drop downwards to this level. This will be our first retest. This is that 20,000, 19,000 uptrending line, this 9-year trend line. This will be our first point of retest, okay? The next point would be down here, and then this whole area here is support. So we do have a lot of support underneath us. Now, what is the chances of actually breaking down over here? I would say it is quite likely we break down over here. Obviously, this is a bearish structure. We've had what, 1, 2, 3, 4, we've over 5 retests now of the trend line. So we've confirmed this structure, we've confirmed the pattern. It's a confirmed bearish rising channel. We do expect a breakdown of this channel at some point. Obviously, we're losing some strength over here. We're not really pushing any higher. We haven't really been able to push over 21,800, which was that major trigger. That 21,800 level, if we go back to the daily, was that major level we did need a break above for us to see the price actually start moving upwards, as that would clear these two local highs over here. Unfortunately, we're not able to do that. We're being rejected from that level, and we're looking like we're pushing down again now. Okay, so guys, little short update from me, not too much today, guys. Just keep in mind what's going on, be aware, be prepared for it to go down, because we do want to take advantage of a short, so you don't want to short. But we're looking for a retest at that point. And this isn't new news, guys. We've been expecting a retest of this for a while. Obviously, we do still expect that push upwards in October, breaking through in October to continue through that trend, through that major resistance zone, which we have indicated on this chart, sitting over here. And that major resistance zone is between these two red lines over here, okay? So let's talk about what actually needs to happen for us to go upwards. So first and foremost, we do need to break through those two red lines. The upper red line around 24,000 or 23,800 is that main level, and that has been represented by this area of resistance way back in December 2020. Pushing upwards from there, we have our major area of resistance between 28,000 and 30,000. This coincides with our major downtrending resistance sitting over here, which is that major bear market descending channel. So breaking through this level here would confirm we have now broken out of the bear market. That is what needs to happen. Pushing upwards from there, we have our major resistance sitting around $40,000 and $38,000. This is an area that we came down and retested a few times, particularly in September of 2021 in the bull market. And finally, for us to enter a new bull market, we need to break over 48,000. Breaking over 48,000 will send us into a new bull market. So we got the macro out of the way, guys. Let's talk about the short term. We're going to really narrow it down to the hourly chart and see what is going on to give everyone a little update and make sure everyone knows what's occurring. But as I talked a little bit about the price directions here on the macro, we can kind of go down to that shorter time frame now. So what is happening in the short time frame over here? Let's zoom in. So I'm seeing a few things. First and foremost, we obviously had a bearish structure form just recently. This was a rising wedge structure over here. It was a messy one. We had a few fake outs, but we were broken downwards. Now the rising wedge obviously is a bearish pattern again. The measured move, it takes us downwards to about $21,000. What we're looking for here is we're looking for areas of retest. So areas of horizontal supports within the chart. Obviously, we do have an area of horizontal support around 21,278. That will be the first target, and it's probably going to reach there by the time the video is done. Moving down from there, we have targets of around $21,000. Obviously, a major zone of support, and we can see we've had that chop between there, and it's happening already. We're already moving down, and then obviously 21,000 lost. We had that uptrending support. as well as a dotted line, and then that would play out into a macro prediction where we drop downwards from there. Okay, pushing upwards, obviously the areas we do need to break above is that $28,000 level. We obviously had a retest at that point, unfortunately unable to actually push any higher, but that would be the point of which we need to push upwards. If we do push upwards from there, we can potentially push upwards to about 22,675. That would be our next area of major resistance, and then playing it level by level by there, upwards from there. That's about it, guys. I'm going to leave it there. I hope you enjoyed the video. If you have any questions, leave them down below. I wanted to keep today's video nice and short and sharp, but it's obviously keep it nice and brief and detailed for you guys. If you got any questions, again, leave them down below. Contact me on Telegram, whatever, and we'll catch you in tomorrow's video. Cheers. Okay, guys, we're going to be taking a quick look at Bitget, and now Bitget is where I personally trade. I highly recommend signing up to Bitget with the link down below. Bitget is probably the best exchange out there if you are a trader. It has a variety of features, and the best things about Bitget are a few things. Number one, it's non-KYC. Well, KYC is completely optional on Bitget. Now, there's a whole variety of exchanges out there nowadays that have gone completely centralized, sharing your personal trading information and information of decentralized governments and different governing bodies. Bitget allows that option to be left to the individual, to the user of the exchange. You can decide to non-KYC, you can decide to KYC. It's completely your choice. Another really beneficial thing about Bitget, and the biggest reasons why I'm sitting here actually recommending Bitget to all my followers, is that it has 0.02% trading fees. All right, this is significantly lower than any other cryptocurrency trading exchange out there. FTX, Binance, could name a bunch more. KuCoin. It is significantly lower, by 500% lower than the lowest exchange out there, Binance. Another big thing, guys, is there's no global restrictions on who can use Bitget. Anyone from anywhere can sign up to Bitget and get access to the entire exchange of all the tools, whether it be futures or spot. No matter which country you're in, you can use futures and spot. If you're in America, for say, and you want to get access to more spot trading pairs, such as Binance Global, and you can't sign up, well, guess what? They've got 250 different spot trading pairs here on Bitget to get access to, and you can get access to all of these. If you're in Australia and you want to access the futures market and you can't trade futures, you can do it here on Bitget. You can get access to the future market and start trading with leverage. And finally, guys, if you do want to sign up to Bitget, go ahead, click that link down below to sign up to Bitget, and you'll get access to the reward center over here, which enables up to $4,000 in rewards by completing 5 tasks. All right, guys, we'll get back to the video. Thanks for listening to that. Okay, guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.